Cappelleri with us, founder, president, CappThesis. Good morning to you. How are you feeling about the week that was? As we're about a month away from the next Fed meeting or so. Your thoughts on some of the themes?
Hi, Nicole. Thanks so much for having me. Well, we should start with the S&P 500, of course. And right now it's in pullback mode, as we know from this week. But consider what it came after. One of the biggest weeks we've had really in 9 months. So it was due for a pause, hit the RSI, hit the biggest level in over a year as well. And so if I look at this market, though, it's really more just about, it's not just a straight shot higher, right? From the March lows, it's up 17% right now, but it hasn't been really right from the beginning to the end, because if you look at that chart, there's a series of consolidations. We have boxes around them and show that really it's been a few days of good moves, consolidation, and then breakouts again, and then repeating the process. And that's what I think we're in right now. Another thing to consider is that we haven't had a lot of 1% declines, and that's pretty evident, but we consider what's happened really since the start of 2022 by quarter. At most, there was 19 per quarter in 2022, and at least just 13, which happened in the first quarter of 2023. And now, almost at the end of this quarter, we only had 3, right? So this tells us, of course, that there's a different kind of shift going on. And this is the type of activity that you sometimes see when you have, a volatile back and forth movement, then go into a more mature, trustworthy uptrend.
Understood. So we've been in this sideways action that you're talking about. And in the meantime, you're looking at different sectors such as healthcare. Is that something you like, or why are you watching it?
Well, Nicole, as you know, it's really been about rotation over the last few weeks. To start off with technology, of course, leading everything. But in the last few weeks, industrials and materials actually up more in technology. Consumer discretionary still does well as well. So what we try to look for in terms of the next rotation are areas that really haven't broken out just yet. And healthcare is one of those I'm looking at. So we have XLV there, but also point to the IHI medical device, ETF, PJP pharmaceuticals as well. You can look at each one of them and say that all of them are forming potential inverse head and shoulders patterns that, again, if capital is coming out of areas that are overextended, looking for spots like that haven't broken out yet, but potentially can do so.
I see. And then you turn your attention over to gold miners in particular. Why?
So gold miners is interesting because it's obviously had a tough time recently along with gold. But if you look at that chart and you see what's happened, it's still in an uptrend from the last number of months. And what's happened over the last few days is it's come down to that uptrend line and tried to reverse higher. And I line it up with what happened in March, because you also have what's called the potential momentum or positive momentum divergence with the RSI there, where GDX most recently made a slight lower low, but the RSI is trying to make a higher low. And we see how that played out in March, where we led to a pretty substantial rally. Now, that would be best case scenario, but I think, again, we're looking for areas that potentially do well if the money's coming out of other spots. And really, that's with all the precious metals, together. But I think GDX especially looks, because of the pattern setup, looks the most attractive in my eyes.
Right, understood. And then just other things that we watch on the daily, and things like the dollar and Bitcoin. The dollar's been relatively low, and Bitcoin had this big breakout. Tell me about your thoughts on both of those.
That's right. So the dollar we have there is a weekly chart. And I think that's really important to look at, because we just came off the third decline, or the third 3-week sell-off of 2023. And that's important because if you look at what happened in 2023 and 21, when the dollar was going lower, we consistently had weeks at a time when we couldn't see any bid. Now, that's a complete opposite of what happened in 2022, where, again, we saw periods of weakness, but the very short term. So really didn't have negative momentum extend beyond 2 weeks at a time. So what it tells me is you just don't have long losing streaks in uptrends. And so the dollar in general over the last few months been sideways, moving back and forth. But I look at that where it topped off at the end of last year to now, and it's still in a downtrend. And that, because of that, it's obviously added to the risky assets class, especially equities, doing so much better. So I think that's one thing you have to look at, going forward. If that continues to be the case, then I think we can still have a potential for the market to go higher, equities wise.
Yeah. What about tech?